What is going on, guys? Happy Friday. Welcome on into today's stream on this lovely Friday, January 20th, 2020 freaking 3. So right now we're looking at SPY and we talk, I think I titled it Fake Outs Galore. I mean, this past week, I've seen some pretty crazy stuff. I think we've seen in general, you can look at it big time frames, short time frames. It doesn't matter what time frame you want to look at. There have been fake outs galore. You take a step back and look at the overall market over the past couple of sessions, and we had a pretty nasty move down. Of course, we've only kind of like retraced like halfway back to the upside of the move down from the trend line. So I guess no guarantees, but it's so funny how sentiment in one day, one daily candle can change so fast, and everyone's like, oh shoot, we're dumping, this is going to new lows. And that was kind of the feel, Wednesday, Thursday. And then next thing you know, you have a plus 2% NASDAQ day. You got a plus 1.5% S&P day. Boom, boom. In terms of some of those fake outs, we'll talk about some other ones that I've been watching that have been pretty nasty. Like, they're pretty nasty. This one I thought was pretty crazy today. This consolidation. So SPY consolidated for about 2 hours around this like 392, which was like the bottom of our zone of potential resistance. We've been watching for the past couple of weeks. Was support, now resistance because we're below. We're kind of trying to get above it. I'll go back and pull it back up. But yeah, so we consolidated here for like 2 hours, and then we had these two candles in the 5-minute that just nailed right down. So if you had stop losses in place, like somewhere below like some of these lows, yeah, it still held above the VWAP, volume weighted average price, fair enough, but it just absolutely nailed people's stops and then proceeded to just rip to a new high immediately. Like 10 minutes later, new high of the day, done. So I thought that was pretty nasty. And I'm sure this definitely caught people by surprise, especially, hey, if you're watching SPY while you're looking at stuff and you're like, oh shit, I gotta get out. And then you get out and next thing you know, new high, boom. And SPY rips like, $4 from that low. And that was only the past like 2 hours, not even, right? Since like noon. My time, like 1 o'clock Eastern time. So that's been the deal. It feels like this past week, the past couple of weeks, it's been choppy. I think this week was kind of feeling a little more fakey in terms of some of these moves, trying to mess with you, trying to make you take the wrong position. But I don't know. That's just kind of how I've been feeling it. And we got actually the strangle. Essentially, the long leg is technically in the green. Like technically, it's in the money. The 281 QQQs. I think I just didn't have enough time. I should have got an extra couple of weeks, to be honest, looking back. Maybe gone a month out on that strangle instead of gone 2 weeks out. That's my bad, but you live and learn. I was just kind of testing it out to see how it worked. But that was essentially, I salvaged some value, but essentially blew that. The whole thing was toast. I sold it at some point this morning. Little did I realize we were going to go potentially in the money, so I maybe could have salvaged a few extra bucks off of it. But I just dumped that this morning because the reality is that it's a red play. Shorting and then yeah, I was in both situations. I had played it, I was in it short, and then I was playing on the futures account to kind of test things out. Meanwhile, we're about to go for a new high today. Here's the futures contracts I was trading. I was on the futures account, and I was in it short off of this lower high right here, and I was looking for it to kind of test down to here. I want to see how it reacted and see if it would push down to to break down that support. It did not, and so then once we came back up and started to inch back up here, I stopped out. So it was a pretty small loss. It wasn't much of a, I was like, okay, I'm wrong off my original thesis of this. Okay, I'm going to get out. And then did this, should have recognized something was off here. We had a high volume on this candle. Look at this volume right here. This is the first like big volume candle. This is a high volume wick to the upside, and we kind of sold off that wick. So like that was kind of sketch. We attempted to go for a new high of the day, couldn't do it. That was probably the sign right there. Something was coming, and that this long was not going to work at least right away. And so something did come. We got the move down. Eventually, the original idea was that would have happened earlier. It didn't. It just took 2 hours to consolidate and jerk around. And then it got the move down that I was looking for. And then it completely soaked that dip and then ripped to a new high. It kind of wonk. I mean, if you're playing off of like, large position size and like scalping, it's like, oh my gosh. But in the grand scheme, you kind of step back and you zoom this back out. You look at, let's say, a 30-minute chart. And you're like, it was just kind of a blip. It was a fake out for sure, but it was a blip at the end of the day. And that blip came right back into line with the prior, a couple hours ago high, the morning's highs, and the high from yesterday afternoon as well. So made sense of why it bounced there, but I'm sure there was some manipulation at play and definitely faked some people out. How I was in, actually, I'm still in. I have one contract left of this. This is a meta call, a 140 for next week expiration. I'm up. I have a 193 average. I don't know if it's behind me, but I have a 193 average. We're going for 265, 263 by 265 right now. I'm looking for 140 target. We'll see if we get it in the next hour. I don't know if we will. If we get that, I'm taking it off no matter what. But I had at 1.4 of these guys, and so I've dumped them along the way up. So it's kind of worked. This one was just the reason, well, not the reason. This was the same deal, right? Consolidating here pretty much for most of the afternoon. And then higher lows established when SPY did that crazy kind of wick down, big candle down. Guess what? Meta didn't actually break down below the afternoon lows or this late morning into early afternoon lows, and it held. And that was why I was in it actually already versus that level, versus that double bottom around this 137.60. Got a pretty good entry in terms of my average on that. But that was when that held, that was okay, I'm staying in. If that broke down, I would have probably stopped out. But that held, stayed in, and it ripped up to the upside. So new high of the day. The meta play was nice. So if you look at Meta's chart, I feel like the second half of this week I've got a much better feel on things. But breaking out over the tops of the past week and a half week and a half resistance really around this 137, 138 area. So this could have some more legs. Honestly, I don't want to swing over the weekend, but it's potentially worth a shot to swing this. If I had taken a lot more, if my sizing was different, or if this position wasn't really very meaningful, maybe it was worth a swing. I'm just going to sell it before the end of the day because you never know what happens over the weekend and all that stuff. But it still looks valid. I mean, this looks like, we're up over the top of this volume here. If we stay above this area, we're breaking out. This could go, dare we say 10 more bucks, maybe even more to the upside in the coming sessions. Obviously, you got an earnings coming up, so I wouldn't hold through an earnings, but leading up to earnings, there could be some room here on Meta. So chart looks decent. We'll see if that continues to hold on that bad boy. But that's where we're at. But a put was moving so fast I couldn't sell. Oh, dude. Let me tell you, when it comes to the moving fast, this week is a red week for me on the Weebles. It comes down to two trades that I bring it back to. I'm not discouraged by it. Well, first off, a large part of why we're red is because the strangle essentially strangled me. We got strangled by the strangle. So there's that. That is what it is. But that was, whatever. I guess I could have salvaged some better value. Look at this QQQ, by the way. It's ripping here. I had a 181. The top end of that strangle was a 181 call. I ended up selling it this morning just to salvage the $20 off of it. But it's technically worth about $100 now, so I could have salvaged $80 more, whatever. But the strangle didn't work this week, so that's what strangled me, which was a couple $100 tossed away. But then it comes down to two situations, and one of them was today, and one of them was a couple days ago. The one that was a couple days ago was Walmart. I think I talked about this one maybe on Wednesday's live stream. It was Walmart. I actually liked Walmart as long as it was holding on these lows right here. And there's also some prior supports around this same area, around this 141, no, it wasn't 141. It was back here, sorry. It was back at this 144 area. I liked it here. I thought we were going to dip right down towards these lows. It was actually a low that we had back on the 10th of January right here. And then pretty much right down to this 143.85 area right here. So I was okay, if we hold this area, I want to be long for a bounce back up towards that trend line on Walmart. And looking back, the Dow was weak. These stocks have been kind of weak and whatnot. And so the tech stocks have been relatively strong. Had a small gap down. And then I was in it long and I was okay, we're doing fine as long as we hold these lows. I got in after these lows. I'm going to stay in. So it was a pretty good risk reward trade. The trade really intended to really risk a very small amount of money because of how tight the stop was based off the pattern that I was just seeing, or the setup I was seeing. Problem was that as it started to play out, looking back, I didn't recognize the bear flag or the consolidation under the VWAP, which was not a great look. And so as I started to recognize that, it became a bit too late. And then I essentially tried to sell my contracts, we had this huge candle down. So everyone says, everyone has a different thesis or a different way to take things of, oh yeah, I stop out once a 5-minute candle closes below my level. Oh, I stop out once it hits my level. That's it. You can see yourself getting screwed in both ways. If you stop out, once a 5-minute candle closes below, how do you get screwed? Well, if the 5-minute candle is a complete dump candle, well, you could end up blowing a lot more of that position in that 5-minute span. Like it's plummeting, and it's just dropping. And if it never kind of comes back at all, like you're down a lot more by the close of that candle than what you could have been once your original level broke, which was the original level that I had. So I was like, okay, I'll put my sell on the ask. As the level broke, I just said, okay, sell the full position. I put my sell at the ask. Problem was the spreads opened up a little bit larger, a couple more cents at the time, and then the stock plummeted. So the contracts just got crushed literally at that exact point. So now all of a sudden, a 20-cent stop loss on the contracts or a 10-cent stop loss on the contracts I was looking at became 20, 30 cents immediately, like super fast. That was a pain. And now looking back saying, man, if I had recognized that as a bear flag, and the contracts were kind of acting a bit wonky. Whereas I think I forget exactly where, but I entered somewhere in here, and then we actually had this candle right here, and we were above where I entered, and I'm like, why am I red technically on these contracts? On that, I'm like, we were above VWAP, but I'm like, I'm red. So when I see that happening, where like the movement, and I bought a week and a half out, so I didn't buy the same day or same week expiration. I bought a week and a half out. I was like, that's kind of weird. When I saw that happen, something was off, and there's a couple different signals there that I just didn't catch fast enough. Next thing you know, I'm down more. I'm down like 2 or 3x what I originally intended to be down because I couldn't get filled, and I ended up having to get filled at literally the bottom of this candle, and I had to slap into the bid as the spreads opened up. So that was my bad, but I take it back to had I had looked at that, had a different view, maybe a little bit of bias there as well going into Wednesday, thinking that maybe we'd see some strength. Overall market looked decent, so maybe some bias for sure. But had I had looked at that differently and been more objective, I said, you know what? Despite us being at support, what does it also mean? If we're at support, man, and we break this support, that means the downside could be pretty big. Had I looked at that and said, hey, this pattern is telling me this could be downside here. This might be a short versus a stop loss over VWAP or over 144. Could have taken that, and that was an absolute monster. Like, did I think that was going to be a monster? Nope, had no idea. Look at that massive freaking move. In a matter of like an hour, this thing was up, like this thing drops from 144 all the way down to sub 142. And now Walmart stock, that's not a common move. That's a pretty freaking big move. So that would have been a monster. So I take it back to that. Minimizing that loss / recognizing that earlier and maybe taking the downside if I had been more, in line with what I had been seeing versus me some sort of bias. I don't want to say I had a ton of bias, but some sort of bias, that would have been different. And then today, holy freaking shit. This one is nuts. NVIDIA, same situation. So I think it was because the Walmart situation, I didn't want to get screwed. NVIDIA, I'm looking at this stock. I'm like, okay, I like this setup right here. NVIDIA was green, was like up 1 point something percent in a market that was up, a little barely up off the open. And so I saw NVIDIA. I'm like, okay. We had these like triple or quad bottoms, all these 5-minute candlesticks come down at this exact same spot, like right in here. And then it holds. I'm like, okay, that looks like a decent long idea. Take it on a higher low. Then they have this 5-minute candle comes down, wicks you down right through these lows. I stop out, just turned it away. I just looked away, just shut off the NVIDIA chart. Came back like an hour or two later to look at it, like holy freaking shit. I was like, we could see maybe 173, 174 today if we really got going, but kind of looked away and went elsewhere, which ended up working out, I guess, for today. But my God, talk about a freaking fake out. That candle ended up closing all the way back up here, so well above where my stop was going to be at those lows. And it ended up being the complete opposite situations. That's why having that 5-minute, having that rule of like, okay, do I wait for a 5-minute close or do I wait for the level to break, right? You can find situations where it works great one way and it completely F's you the other way, and then vice versa. Like, it doesn't matter. So that situation would have been, well, looking back, yeah, the Walmart, if you just sold it on the level break, you would have saved some money. Okay, I sold NVIDIA today on the break of that level. Guess what? absolutely faked me out. And now Nvidia goes 6.5% to the upside off that. Would have been a monster. So I take it back to when it comes down to it, at the end of the week, it's 2 trades. Like those 2 trades go different ways, or I'm a little bit better off how I'm handling, or if I just don't get faked out, the week is made in 2 shots, done. Because then you think about it too. 2 negative trades, right, off of that. Talk about a P&L switch. If you first off cut the losses smaller, well, this one was fine. The Nvidia loss was a pretty small loss. I was pretty good with the risk management. It just was a fake out. Would have been an absolute outlier upside play had I scaled out somewhat properly. This was like just rocket to the upside. So would have made a much bigger dent, right, to the upside in terms of P&L than the effective risk that we took on it. So 2 trades go your way, and that's a completely different week off of these moves. So the good news that I'm seeing off this week is that we got some good moves. The bad news is that it's been feeling a little fakey. All right. We'll see. Another down day for Nat Gas. Jeez, oh my God, it's down to $3. This thing has been getting absolutely annihilated. There's been no bounce. Like there's been absolutely no bounce in natural gas at all. That's pretty crazy. That is actually really crazy. Some Russell futures. I have had the futures account. What are we up to? I finished last week around. I just took a few trades this week at like 240s. It's up to 295 or 294.50 now. So I've been working a little bit. We'll see. Just taking trades that I would take on SPY and stuff, and the Russell, and taking them on futures instead of the options. Should have been buying more calls. I feel like a lot of people are going to be feeling the same way. I think a lot of people didn't believe that we'd be going up like that. Well, then again, right, we're only back testing, like half of the move down so far. But people didn't think we'd see green. But that's the other thing too. It's the monthly option expiration day. Here's SPY. I'll go to SPY's 5-minute chart. By the way, those freaking QQQs this is just ripping straight up. Let me check on that Facebook or that Meta play. 25 cents from the profit. 25 cents away from where I'm taking the last contract off. So maybe I'm gonna go short all the time. Well, that's the thing. When the bias gets you, man, it's like it's the worst thing, And sometimes it's the best. At least if I felt like it's the best as of late to be like come in each day and not really have a bias on what we're gonna get based and let the price action dictate the bias. Wave 3 has begun. If we can get 39.80 on ES, I'll go short in a day. Tight stop. Yeah, I have tried futures. I've been trying them a little bit more. So I have them on Trade of 8 on TradingView. Here's the account. I can pull it up if I can make it bigger. We're up to 294 on the account now. Today I had a red and a green and maybe a couple small ones on top of that. But we got up to, I think I had it up over a little over 300 maybe yesterday. Had a small red day today, but it's up $50 in the past week. But I've been trading like one contract at a time, on the micros, just to get a feel for it. I've been liking it. I mean, a ton more than playing SPY calls and puts and stuff like that. So, I mean, I haven't touched a SPY or a QQQ call or put or anything like that. Even an IWM, I haven't touched that at all the past like 2 weeks, I don't think. Outside of that one, the strangle that we tried that got completely screwed. But that's just the reality of a strangle, right? That's the worst case, almost the worst case scenario that could happen. Also, the Labus, I had a Labu one as well. I sold that today. It ended up being that I guess I could have milked out a few extra bucks on it. But these also screwed me. I think I just didn't buy enough time, to be honest. And I didn't take the gains when I had them. On these, I had 50%. I did take off like half my position at 50% profit. And then I ended up taking off the rest of it at like a 75% loss. So I don't know, do the math. I may have lost a few bucks, or it's like almost break even on the strangle. But the idea made sense, and it was green for a brief period of time, and it still might be like in the future. I just don't think I gave it enough time, to be honest. And also, we didn't get the type of reaction that maybe we were expecting off the CPI. Was that last week? It just so happened that CPI came in line with expectations like so perfectly this time, which it's a funny way how the market works, right? It tries to, there's always ways to get screwed. But this squeeze out, man, is pretty impressive. I think this is pretty nuts to the upside that we're getting. Looking back, that QQQ, man, if I had held on to the last leg of that, what did I know, right? The last leg of that strangle, I could have salvaged it for maybe only a $250 loss instead of a $500 total loss on it. But it is what it is. AXP calls overnight, sold to a really nice runner today. I mean, we got some good moves, even in small, in the risk on names too. Tesla's up. Look at this, almost 5%. What's Tesla at? Tesla 1 month. Yeah, it's not back to the highs it was on Wednesday morning pre-market, but it's getting back up there. What it did was it pretty much broke above this 123, 124 area, and then came back, retested it, not perfectly, but came back right here yesterday, and then held it, and then it's been grinding since. So the bigger picture, when you zoom out on the 30-minute chart, 1 hour chart seems to work a little, or might work a little better there based off that price action. Feeling some inefficiencies. Liquidity setting up for we dump. I wouldn't be surprised. I wouldn't be surprised. But next week is a new week. The way I kind of view it is we'll kind of reset next week, and however this week ends, it ends, and we'll kind of come back in and try again. Get back to the drawing board. So we'll have a full week instead of a 3 or a 4 dayer. 3% on Qs. Yeah, it's ripping. It's getting close. Perfect day for the 0-day calls. No, yeah. And the funny thing is that I think going into today, if I had to, I mean, of course, trying to guess, you can get yourself into a tough spot. But going into today, I don't know if I really would have said that. Would have expected a huge move. Would have maybe said, okay, maybe it's kind of a quiet consolidation type of day after a decent move down. Wednesday, red day yesterday. Maybe we kind of just consolidate and chill for a bit before the next leg, or maybe retest or bounce back a bit. Not a 2% green day, maybe a 0.5% green day, something like that. But now it went even further. All right, let's face this meta, man. I'm just gonna probably dump this. That hit inches from my target. I'm gonna sell at 280 last contract. Market's designed to create max gain. That's how it really has felt the past couple weeks, I think, for sure. Because it was, I don't want to say it was an easy short, right? But that trend line was pretty glaringly obvious, right, to a decent degree. So it was okay, nice short, and I think people are waiting for that. People are waiting for that rejection to short it. Let me get rid of this zone because it's kind of just clogging us up here. People are waiting for that rejection to short. Obviously, unless you're front running it, you wait for that rejection. Okay, you get a big move down, but you really, to get that confirmation, a lot of people probably chased and bought puts down towards these lows, on the lower half of that day on Wednesday. Now they're like, oh shit, I'm down. We're ripping back up and getting squeezed. And now, and then maybe next week we have the downside, after they get squeezed out and hit their stops or whatever. And they, I'm not going to hold over the weekend. Screw that. That's kind of how it seems to be panning out. I just feel like, in my view, from I think I'm very prepared. I'm not going to expect that we're going to break this, right? Obviously, we can't expect that until it happens. I would be very much prepared to take advantage if we did. And I have a pretty good plan of what I would like to do in other longer term portfolio and stuff, if that was the case. On a break of that trend line, if we got it. So I think I'm ready for that. Obviously, downside. I think the downside is, to be honest, more fun to play. I mean, when you're playing bear flags, you're playing puts, and you're playing breakdowns. I mean, I think the moves can be pretty aggressive, especially when the VIX starts spiking up. Contracts can move really, really nice, and the panic, hits. Some of those, figuring out those pain points, those spots that are the big crucial spots. That's one of the things I feel like I've done a pretty good job of being able to pinpoint the levels, the key levels, if you want to call it that are we break below, we move down pretty bad, we break above, or we hold this, we bounce. The executions on that have been a little bit off. I think partially with sometimes bias coming into it, which I feel like I've done a much better job the past couple months of eliminating bias, which hadn't been a situation in the past. a couple years. That's kind of what you're trained. You come from an investing background or whatever, or a swing trading background, and you're like, no, this is what's going to happen. I'm going to be right. I'm going to be right. But, what happens when you're wrong, So saying, okay, screw the bias. Let the charts dictate the bias. Bitcoin moving as well. 1,000% on the QQQ calls. Yeah, it depends on what you find, but depends on what you play. But there are some monsters out there. Look at that Bitcoin. Kind of a, you want to call it a bull flag almost, if you want to call it that. I don't know. It's kind of a wonky looking setup. You kind of had this move up off of last weekend, consolidated, broke down on was that Wednesday when the market kind of had the red day. Now a relative or new high on the week, going into the weekend up near 22K on Bitcoin. I would have wanted to see it come back and, retest back into here before a bounce, but it didn't seem to do that. It's just ripping for it. Is that healthy? I don't know. Probably not, but check out silver and gold. I have a swing position now on this, on silver. As long as these lows hold, didn't get the best entry on it, to be honest, but I'm playing it especially with the dollar. If DXY stays below 103 and these levels hold, I added a February position, but it's not a big position, and we'll kind of see what happens. It is up towards resistance though, so you got to be careful. But DXY continues to look pretty weak. We'll see if it wants to break down further into next week. But stop loss is under like this 23, 15 area on that. But we shall see. Gold, how's gold looking? Gold's pretty strong too. It's technically red today, but not by much. Gold's getting up there as well. Silver and gold. Oil, let's take oil. Oil, where is that at? Oil's chart. We can talk about the downtrend. Get rid of this massive arrow. It's coming up to a spot right here. So I think we've had this situation. I've had this situation in the past, and I didn't do it. I didn't take anything. I didn't take advantage. But there was this chance. There was this chance that I was like, if oil gets up into this zone, I would look to be short if anything. And now it didn't really get up into that I was looking for 95. It got to 93. So I was like, and it stayed there for a day or two, and it was pretty quick back to the downside. Only difference, I guess, this time it's now technically trying to make, a higher high compared to this high right here that we saw back in late December on oil. Try and do, but this is going to be a spot. If it gets above this 83, 84, okay, great. That's not looking like I'd want to necessarily be short, but we'll see. See level break, then reverse. Just grab liquidity and reverses. Yeah, no, those are common. Yeah, and I think we saw some of that with this Meta today too. I was looking at Meta. I didn't take it. I had Meta on the watch list, and I was like, hey, Meta over this blue line. I had an alert on the line. This 137.50 would be a nice potential long. I mean, to some degree, it kind of played out, but you had this big move right off of the low up over that level. People probably chasing longs right here. Then it came back, and then it even broke below VWAP, so it had a pretty decent pullback of $1.50 almost on Meta, and then eventually got above. But I was like, I'm not absolutely freaking not chasing a breakout right now in the morning. There's no chance in hell I'm touching that. I ended up playing it, but I played it once we broke down, came back up, and then essentially I got in literally somewhere in here. Really nice. I think it was a good entry with a double bottom set up right below and above my line. So I'm of my level. So I thought I was I might have to stop out. This candle looked like it was going to come down and break us, but we didn't break it. So I stayed in, and it ended up being good. But yeah, I mean, those types of moves are, you always get kind of sketched out by that stuff. That's why if you're going to be playing a breakout, either look for the re-break or the retest, or if you're playing a breakout here, wait for it to get above, build above, and there's a cleaner trade there. Yeah, you'll catch some. The problem is that there will be some that break this level and just go straight up. It's probably not the healthiest of moves, but there will be some that do that. And the ones that do are the ones you have the biggest FOMO, and you're like, oh my God, I suck. And then that brings the habits to make that decision, or make that poor decision maybe later on, But it is pretty common setup, and I think that those are fun, especially when you're in an environment where things are kind of tricky and it's been kind of fakey, and and you can kind of see how everyone's feeling very one-sided one way or the other. And you get a move like that, and you start to see a breakdown. I mean, you can see people who got in long, all of a sudden, all the stops start getting hit. That thing gets flushed right back, or the vice versa on a break to the downside. I've seen it happen before too, where you break a support briefly, come right back above, and next thing you know, it ends up ripping back to the upside. Try signing up for Forex on TOS, got rejected. Any idea why? I have no idea. I have a TOS account, but I haven't really used it, to be honest. I think I have some money in there, but I don't even know if I actually am in anything. I might have taken it all cash, but I don't know. I don't know if TOS is the best place for that too. I think there's probably better brokers, I would think, but I'm not very familiar. Oil's been a dumpster fire. Yeah, the problem is that when it's leveraged too, and nat gas has been just on a straight destructive move down. I mean, again, like I've been saying, like, you know, it could bounce. I had that swing idea off the 350 area when this big wick, we came down towards it and then we closed above. I'm like, oh, this looks like a decent opportunity because I had a level of support there. And it was for like a day. I was looking for a target up here, you know, ended up getting stopped out the next day. But that's kind of why I got stopped out, because I'm like, you know, while I do like the idea for a bounce here, like who knows when it comes, and it could go a lot lower. And so it's unfortunately just got a lot lower. But, you know, it's coming down. I mean, you got to say eventually it will bounce. I mean, the problem is that there has not been an opportunity to re-short it, I think, because I liked it. And this is not that long ago. We're like talking like not even like a month ago, like literally a month ago. We were seeing natural gas up in this zone. I'm like, okay, if we break down here, I like it short. Just never got the retest the perfect retest, or one that looked good to me at the time to take it short. But my goodness, if you played cold, KOLD, what did that thing do? Cold from that point, my gosh, it's gone pretty hard the upside. But I think the better plays, to be honest, are like the shorts of the leverage ETFs. Like going short oil, if you were looking to short natural gas at the time, you know, would have been a much better play back then, because you go from $30 down to $9, you know, versus trying to go long. I mean, either way, I guess. But when you get the decay factors on these leverage ETFs, the short side, to be honest, of the leverage long tends to be more fun. That's what I've been finding with, I haven't really traded much of it late. I had one today that was I ended up taking it for a small loss, but it was on Labu. If I'm going to short XBI, if I look at XBI, I think we're going down, for example, I go to short Labu, because this thing just has a cleaner, I think as the contracts will move cleaner. And if the contracts the spreads are not big, I've been finding lately that you can find, you know, a week or two out, whatever you want to do, 1 cent spreads, you know, bid-ask spreads of 1 cent, not like on XBI where there's like 10 cent spreads. So I've been finding the spreads are kind of better. And if you're looking for a downside, you know, shorting a 3x leverage ETF to the downside is essentially going to do the same job as shorting the original ETF to the downside too. You know, but if you're wrong, right, you're obviously, you know, got to make sure you have stops in place and risk management in line to some degree. Why is nat gas going up? I wish I knew. I really wish I had an understanding for it. The problem is that there's been a lot of forecasts. Let's see if I can pull some up. There's been a lot of forecasts for just like warmer or warmer temperatures. Let's see if I can pull up like a full like northern. I don't know if Northern Hemisphere is the best idea. I'll go to North America, and then I'll go over to Europe, and we'll just do both. So this is not like the best of views. I know it's like kind of small, but I'll pull up temperature anomalies. So what's a better way to look at it? Yeah, this is better to look at. So essentially, you know, blue and pinks are cold. The red and the light reds and I guess kind of pinks, that's where it's hot. So if you look around, right, if you look at the forecast, this is going to go out a couple weeks. If I zoom it across, this is kind of like right now, super freaking warm up in Canada. And this is relative. These are anomalies, basically, like how far off the average are we? Like out west in the mountains, right? You're cold. They got a lot of snow out there. If you play it out, you know, I don't know, the East Coast, man. A lot of people over here, where a lot of people are, Great Lakes, East Coast. It's just been pretty warm. You don't really have a lot of crazy cold shots. And when they do try to come in, it's not very long lived. These are like small cold shots. Here's one. This is where we get interesting. This is where things get a little interesting. Now, of course, I haven't followed this like super, super close, but and the correlations. But if you look at this, now you get into this is like late January, January 29th is what the date is on this, but it's still, far out. So forecasts there'll be error here. The farther you go out, the more error you're going to have. Now you start getting into some pretty decent cold just countrywide across the US. And like when we talk about the cold, I think it's more important to note what happens like east of the Rockies. Like that's, I think, where we see more reaction to this stuff. So you play this out and you stay like pretty cold, then it kind of gets warm back in the central country, and then you see this kind of cold sneaking back down from Canada back into the upper Midwest. You start scrolling through. Some of that breaches itself into the Northeast. Some of it gets down somewhat south. So it seems like it's like, okay, there's some potential cold, but it's just generally been warmer than expected. If I were to go over to Europe, let's go over to Europe and see what we can gauge off of Europe, because they've got a pretty decent effect on nat gas demand and stuff. So we want to see you want to see, as time goes on, a lot more blues and pinks, like darker blues and stuff, than the reds and the warmer colors. And like to the eastern half, like, yeah, you're getting a lot more on the eastern side, a lot warmer. Western half cold, but nothing like insane, like not a ton of pinks and stuff and purples. Start scrolling through, like it doesn't look like, if I'm looking at Europe, I'm like, I don't look out here and say, oh my gosh, like it's going to get really cold. Okay, you got to February. Here we go. Now we get into February and things start to get a lot more consistently colder than average, on average here. So this starts to get a little bit more interesting. I just wonder, and I actually this is kind of what got me, I don't want to say got me into like the market stuff. Back in college, we had a trading challenge and we traded natural gas futures, and we were literally just basically doing it based off of forecasts like this in the US specifically. I did the worst in the class, by the way. I had the worst results in the class. Now, it wasn't like perfect and I had no idea what I was doing at the time. I literally, like back when I was like 19 years old, I don't know. But I did the worst in the class, and I had never really looked at natural gas. I'd always be more familiar with just stocks and stuff. And I never really had much experience at all, but it was kind of fun. It was like a class thing, and we had to like present at the end of the year, like end of the semester, like our results. And I got up in front of the class and was like, all right guys, well, as you can see, I did the worst and it was not good, but here are some things that I could improve on. That's essentially what I had to present to the entire class. But yeah, I mean, you got to go out to, looks like February. Looks like February, the forecast. Now, it's still, the problem is, like, that's just a couple weeks out. 2 weeks out from now, the error is much greater potentially on these forecasts as you got into February. So you go out that far, and how much do you want to put on this natural gas? Like, how much do you want to, weight behind that? You want to put, I don't know. If I'm taking this, if I'm basing it off of that, and I would have to look at the correlations and look at this stuff a little more in depth before I would do that. If I was going to base it strictly off of that, this $3 range doesn't seem like a terrible idea. Potentially for, hey, like just for a bounce back to 350, and not even saying back to 4, but a bounce back to 350 on nat gas, maybe. And you'd have to think that you're going to get that eventually. It's just like, I don't know, when is it going to come? Who knows? It could keep going down a lot more before it does anything like that. Let's jump back to this meta. Did I get filled yet? Oh shoot, it dropped on me. We'll see if it comes back and hits that sell. I got 30 minutes to get out of it. Still up like, I don't even know. It's up a decent amount on the last contract. Boil and cold, such in the same pairs. Yeah, it's death or glory. Yeah, that's how it is on those things. Also, the natural gas inventory reports that come out are probably important to look at too. If you're looking at trading it based off of that. To be honest, you can look at trading it based off that, but there's people who've been doing that for a long freaking time, who are all over that stuff. I would say from my perspective, I'm much more of a fan of the technicals, and it's either this happens or it doesn't happen. And, you can back your way into it, and maybe there will be some news if those forecasts do actually confirm out into February in, let's say, the US and over in Europe, and things are pretty cold. Maybe you get some confirmation of that. And this, and nat gas takes a tumble, or takes a bounce, not a tumble, takes a bounce. But I don't know. I'm just going to dump this Facebook. I'm not really liking what I'm seeing here. into the end of the day, in case we get some profit taking. I'm going to take this Facebook contract off, and then I'm done. I had one position that I forgot to sell. I had this is jumping on me here. I had a BlackRock. I won't say it was a great idea. It was a speculative position or potential idea. So I'll pull up ELK, and I still think it will be a decent idea when the time comes. But over this 760, we got above it was that Wednesday, and so I took a call. I didn't realize I had two, and so I sold one for the loss. Then I look back the next morning, and I'm like looking at my portfolio. I'm like, I didn't think I had that many positions. I'm like, oh shit, what is this? I look back. I'm like, oh my God, I had the BlackRock, and I couldn't even sell it. It had been essentially after Wednesday, and then Thursday morning we gapped down. It was worthless because I had a 775 in case I was playing it for the breakout, and it actually looked decent. Obviously, you're front running. No, I didn't front run the breakout. I had the 760 area as my like breakout point. And it was this day. It was on. I forget what day it was. Whatever day it was. Wednesday this week. Why is like this price action like horrible? Maybe it's Tuesday. No, this is Wednesday. Price action looks horrid, but it was up here. I feel like this was not that bad when I was looking at it. It was up here, had some good volume on Tuesday afternoon, up here, and then once it fell below the VWAP, I got out. But I only got out of the one contract. So the other contract essentially just bled out another, couple $100, and I literally couldn't sell it. I tried to sell it. I maybe tried to sell it for a little higher than just getting rid of it for like 5 or 10 cents to get rid of it. But I've had an order the past day and a half at 5 cents. It has not filled. So no one's been interested. It expires tomorrow. That's the problem. But that was a bad one for me. This week, BOK ops is pretty cool if you can be in the right. No, it can move a ton. So yeah, and I played it was worth like $2.50 or something like that for a 775 call on Wednesday for the same week. Now, of course, it was a day trade, and it was the same week expiration, so I had 3 days until it expired. But when we were above this 760, I was like, hey, we've moved, $10, $20 in a day like that, no problem. So 760 to 780, I was even looking at a target of 785. That's not unrealistic in a day at all. You zoom this chart out, like not at all, Those are the spots I had in mind, but it didn't hold. It broke down below, sold the other one when we didn't break out, when we confirmed we're not going to break out on the VWAP break, but we had two. That's where I feel like it's been hurting me the most. It's been like these stupid things that it's like, oh, that shouldn't have happened, but it did, and it's part of the game. Home Depot is great for options as well. Hold on. Yeah, Home Depot I've played a couple times. I liked it. I still think it's a good idea on the short side. In the future here. I like it as a short, but market's got to confirm that next week. So, not shorting it now blindly, right? But it's a short for like a day trade opportunity, I think, as long as especially you got a lot of these wicks, a lot of these lows right here that it caught. If we stay underneath this like 315 area, if we stay under that level, it looks like it's a decent opportunity, I think, for a continuation move down. And there are some gaps to potentially fill. We got a gap right here down to about 293. So, and the Dow has been a bit weaker as of late. So if we were to, reverse back to the downside for sure now here next week and weeks going on further, I think we've been seeing better strength in tech than we've been seeing in the Dow, which the Dow led us from October, up to January here, but it looks like the Dow is not showing that relative strength. So, if you're looking for shorts, you'd probably want to be looking to short stocks that are more so slower, or not, I would say more so non-tech related. Tech will obviously move a lot, and those things will move, but maybe not as much. And the funny thing is Google, freaking look at Google today. Let me see if I can pull it up. Google up 5%. Look at this thing. Gap and go. My goodness. On Google, this thing just ripped to the upside. I actually had Google yesterday. I played it yesterday. But when it held, what was yesterday? When it held up right here off of these, essentially right here, as it held this like $93 area, it was kind of a slow, grinder into the end of the day, kind of cool, whatever, but it gapped up. But the thing is, yesterday was a red day, and it stayed very strong into the end of the day, so it had really good relative strength, and then gapped up huge, and then just ripped it. So it's a crazy. So that's why, and even Meta too, right? Same idea. Meta, broke out over the resistance. Broke out to a new high since October 6th, before it had the earnings debacle and the thing went down under $100. Like, there's some strength in some of these tech names, the beaten down ones. So do you want to short the stuff that's been relatively strong? I mean, yeah, if the market goes down, everything probably just generally will go down too. But I think you've got better risk reward on the weaker stuff, right? End phase, look at this thing. Talk about weak. My gosh. Despite the strength, it's still down. Something's up here. It's filling the gap to the downside. If I had to guess, obviously it's kind of at a potential support area. But this has been freaking weak. So I don't want to say guess, because what's the point? But looking into next week, if we got some red, or even just not even that, if we just if I'm looking for a short idea, this might be one of those on the list that's high on the list, as long as it stays under like 225, 230. This thing does not look too good, especially with how the market's been today. So day trading options you recommend in the money, out. Didn't really notice a difference on, but yeah, it depends. It sucks to say it depends. You could be really good playing out the monies. You could be, and generally speaking, the risk reward profile on the out of the monies is so much nicer. The problem is that there's more things like time decay that are going to hurt you, volatility decay a little bit as well, that are going to hurt you. I have tracked, and I'll pull up the data maybe in tomorrow's video. I'll go back through it and check it out once I upload all my logs, my trading logs from this past week into the tracking platforms. But I have found yet again this week that the better trades that I've had, or the green trades, more green trades than red trades, have been on the higher price contracts versus lower. It doesn't necessarily mean in the money versus out of the money, but many times it does mean in the money or closer to the money. Plus about, give or take, 3 to 7 days till expiration roughly. I have just found that for me, I work better that way. It allows for my risk to be, in line with what I'm expecting. Nothing crazy. I'm not going to have a 60% loss on any given trade. Whereas if you're playing out of the money, depending upon, how far in terms of, you're going out into the future and the movement we get and your stop loss, you could have a lot bigger downside, which is fine as long as your sizing is, makes sense. You can get bigger upside, but I just found for me, the win rates substantially decrease, and the upside, I have not been able to capitalize properly, just the way that I guess that I do things. Now, of course, there's things I can improve for sure, but I have found the more expensive contracts be better for me. So I guess in the monies for me, but it's more a personal preference, and basically I would say data dependent for everybody, if possible, if you can get the data. That's in CFRX, crazy swing. Check out, by the way, NVOS has got some freaking volume, but I'll look up CFRX. Let's see. Oh, yeah. That's going to get added to the list right now. Something's going on here. Add her to the small cap list. I mean, I'm actually getting close to maybe having room for an additional entry on the small cap list, but the volume has been notable, right? Really since December. Big move there to the downside. Well, another red day today, but big volume. That's a freaking gap. Talk about a gap. It's a 9-cent stock, so cheapy, really big cheapy. I wonder if, let's see if I can pull it up. CFRX. Dude, I can't tell you how many scam calls every day. I don't know if you guys heard my freaking, I guess my computer should be shut off volume. Scam calls are absolutely nuts. I get like 17 a day. It's so annoying. Offering they did in December. So there's a $7 million offering. They probably have, yeah, here we go. Grants under NASDAQ listing rule. I would just want to make sure that they are not going to get delisted. That's the thing. And they may actually get delisted. Let's go to BAM SEC and check it out just to see if they have any other filings. Because it seems like something's up. But the thing is, investor presentation offering. Here we go. This is November. Here's this. Okay. This is important. On November 22nd, they received a letter from the NASDAQ. They have company stockholders' equity on its quarter or its 10Q did not satisfy the continued listing requirements. Requires a listed company stockholders to equity be at least 2.5 million. It was negative 3.1. Has no immediate effect on the listing or the trading of the company's stock. But in addition to the previous notice that was received on the 25th of August. Okay, let's see. They have 45 calendar days from the date of the NASDAQ staff deficiency letter or until January 6th to submit a plan. If they accept it, the NASDAQ may, in discretion, going to come 180 days from the date. Okay, so if they accept the plan, they might give them 180 days to satisfy like the minimum bid requirements. If they don't, the NASDAQ does not accept the plan, then they will have to potentially delist them. Let's see. They're currently evaluating, but that happened. Like that January 6th has already passed us, so they should have had something. No, there hasn't been news here. Let's go back to this. I haven't seen anything. That's why it's a little sketch. So if there's no info, I would guess you can dive a little bit deeper. Maybe there's something bigger that you can find on their social medias or their website. But that's the problem. And so this to me seems like they may be getting ready to get delisted if they could not satisfy the requirements by the NASDAQ. Maybe. And if they are, this volume as of late is potentially either dumping or some volume loading up for the last hurrah where they run this thing, 50, 100, 200, a couple 100%, and they delist. Like it happens all the time, whether before or after the delisting notification or whatever. So I'm a little sketched out by that, although I do think this has potential. Don't get me wrong. Obviously, it's not a stock to hold, long term, but there's some sketchiness there, and the latest update is on the 3rd. What's this? Special meeting of the stockholders on January 31st. Approve the company's for a reverse stock split. Issuance of 4.3 million shares. Approve the special. I mean, this might actually be something to think. Maybe they're fine. They might be okay. This is. I imagine this is essentially their plan, right? That they submit to the NASDAQ and like, hey, here's our plan to meet your requirements, yada yada, and take care of this stuff. But this meeting is on January 31st. It's not next Tuesday. It's the Tuesday after next Tuesday. So there's plenty of time before that. And who knows? They may be ready to run this thing in anticipation of that. I don't know. Maybe not the best situation there because of what's going on. I could see them running it. I just, maybe not the best of circumstances, to be honest. Pull up NVOS. NVOS, but I would not be surprised if they run it. Here's NVOS. Check us out. So new lows just hit on NVOS yesterday. And then look at the volume. What was that? 20 million. Oh, shit, that's a lot. 20 million the past 2 days on NVOS. 20 million shares. Now, this thing has not been trading that many shares, right, until recently after offerings and whatnot. But still, that aside, they've ripped it to new lows, got a big fat gap up to 60 cents. If NVOS hits 60 cents in the next couple of weeks, I would not be surprised. We've seen this pattern time and time again now. So I'd be potentially looking for something like that. On my swings, which I have pull up the other swings that I got. Let's run through the small cap. I haven't looked at the small cap list, to be honest, actually, in a bit. NSPR, a lot wonkier of a chart, but a lot of volume as of late, so something to watch there. SDC already ran, just went from 30 cents to 60 something, or to 80 something cents and 90 cents. AYRO has done a really nice job off the bottom. DBTX, ACHL, WISA, oh, there it goes. Look at that. Boom. There it goes. I mean, it ripped. Someone mentioned it too. Pep can't risk a good idea. Also, what's that, a pump and dump? Yeah, there it is. I mean, I was looking at this. Here's a classic, downtrend, almost a wedge formation right here. Well, I guess it is a wedge. You bring this up. And I actually, by the way, I submitted to TradingView a potential request for them to not fix their shit, but to make their stuff better. And what I told them was, if you guys could make it so that we can move the watermark, like this watermark in the back where it says WISA 1 day, right? The company name. If you made it so that we can adjust the size of the watermark and move it, I would be the biggest fan. And they said, okay, we noted, and we'll see if they'd ever make that change. Because picture this, being able to put this watermark, like leave it up on the screen so that's easy to see, okay, what we're looking at. It's easy to clearly say, okay, we're looking at that stock, but have it be like right here, Because I'm mostly when we're looking at stuff, like we want to look at the middle of our screen, right? We're not looking at the top corner or bottom corner. Not that the watermark's a huge deal, but imagine putting it right here instead of having it there, or being able to move it down to here, right? Or being able to move it here, wherever I like it the most, or wherever you like it the most, so that you can still see the ticker and the company, but you can adjust that. That would be sick. But I mean, here you go. You had soaking of lows. So yeah, it went to a new low technically right here, but a lot of wicks into this box. You had a downtrend. You broke the downtrend. Whoop, gap fill, done. Thing went from, I don't know what the percent, it's got to be over 100%. So from that low, obviously from the low is, no one's going to get the absolute low. From low to high, 125. So you probably could have captured, 50 to 100% in there. Pretty doable. If you got an average somewhere, I don't know, even let's say 10, to 18, 75%, boom. I missed that, but it was on my list. SRZN is one that I'm currently in. It still looks pretty good. I'm looking for like 70, 80 cents and higher, and we're getting closer and closer there. FNCH, what happened here? No, nothing yet. Still could be good. NXTC is one that I'm also in. I was in, I forget where, I got in like 125. I sold some 150. I sold some 175. So I don't have much left. It might kind of just be a grinder. If it just kind of grinds back up into the twos, I'll just be selling it little by little along the way. But I'm selling most of that as things have gone on. Bolt, what happened to Bolt? Nothing crazy yet. Bolt still looks like it could be good. It could be good for a move. IGC, Meds, still could be something here. METX, could be something there still. Grom has been getting loaded right here. Grom from the 170s, the gap fill is up to $3. Grom is like a top watch for me, I think. Just did a reverse split. I mean, talk about juiciness. Let's see what I can pull up on Grom. I might, if I have some cash next week, or if I get out of one of the positions, I'll be looking to do that. They had an offering. Corporate update. Let's check this out. What's their corporate update? What kind of bullshit they got here? Let's see. Well positioned to reap the benefits of the growing trend in child safety in the social media industry. Yeah. Okay, I don't care about this stuff, man. This is a BS update. That's not helpful. All right, Grom. That's just fluff. That's all it is. But let's see what's actually been going on in the filings right here. So they got a $5 million offering. So you like to see that back on the 13th of December. So that's a good thing. Back in here. That's good. So you got cash. You're bottoming out. You got some volume coming in. Gap fill to 3 is not unrealistic here, I don't think. So I like that, especially as long as it holds the 120s. The problem is the risk is a little bit higher than I would want, because this thing could drop 30 cents in a day and still technically be valid based off of, being in line with these lows. So you got to have a little higher tolerance if you're going to play something like that, but still worth a shot, maybe. Let's go back to the main list. SPY ripping back up. QQQ, yeah, man. QQ's back 283. 283 almost on Qs. SPY new high of the day just hit. New high of the day. Just like that, we're back over at near 396 on SPY, and as we inch our way across, right, just so that's in the back of our heads, we've actually gone, filled back about half of the move on Wednesday, right? So there's that. But this trend line on Monday sits, technically speaking, from the way I drew it, it's just under 400. So 400 breaks. If SPY breaks 400 next week, that would be the technical breakout of the trend line. And then I think 410 could be in the cards if it's not a false break and it gets continuation. But I would say, realistically, if we're going to go, we got to break 400, build above, break 410, build above, and then we can talk oh shit, are we actually going to have legs here? So we got a long way to go, I think, still for that. But technically speaking, it's only $15. And we've seen going into earnings season, an earnings season that, let's be real, is expected to be absolute dog shit. No one is expecting these earnings to be good. So I think select performers that outperform in this environment will be the best bets. The overall market still may take a hit. We'll see. But again, the same idea here is how much is priced in, and we're about to find out in the coming weeks how much is truly priced in and how much is not. And don't be surprised if earnings weeks are strong. So, deleting comments. Some must have said something bad. Should have held on that 395 strike, SPY call, $25. Jeez, that would have been ripped. Yeah. Who would have thought today would have been the rip? I mean, to be honest, I'm not surprised. I'm not surprised after this. This, technically it was above VWAP. There's that. But this move right here, once that caught and ripped, was something's going on here. Something's going on. I had played along on futures. I grabbed something here versus these lows, and I put a target sell at 3956. It's somewhere up in here. It hit so fast, and then I wasn't at the desk at the time, and then looking back, that could have been a monster. I actually was in a futures trade prior to that in here with a stop loss below these lows, looking for a new high of the day, that same target. Problem was that we broke down, stopped me out. But then when we stopped out and it had this quick wick action back, I was like, seems sketch. I'm going to take a long. I think we have some manipulation. Take a long here versus a quick stop below. So not a huge stop for a much bigger risk reward. It was like a 3 to 1 or more. So that's why I took it. But could have just honestly at this point, could have just could have taken the position, put the stop loss on and just walked away and then just come back and taken it off at the end of the day. All right, that'll do. That would have been massive. But I still been liking the future stuff. And the fun thing about micros is they're cheap enough and the risk is not huge that, you can size that in nicely. So if you want to start trading, one contract to test things out, great. But eventually you get to 5, 10 contracts. Okay, now you start playing with more size and a little more leverage and, great. Eventually you can size up to the minis instead of micros, but it's been fun and you can size it up. It's just like options, but without a lot of the downsides of options, Stop loss is going to be my stop loss. And I also like when I enter orders, for example, if I was to do it, because I have my broker connected to TradingView. If I was to do a limit buy, let's say I was going to do a limit sell. Say I was going to go short right now. I will set my take, profit, and stop. I could set these at prices or ticks or whatever, or percentages if I really wanted to, or I could just leave them and then adjust them after. So I'll go in here. Let's say I want to go short at 39.90. Something like that, or a 39.91. If I put this order in, that's too close. Let me just make this go higher so I don't actually get filled. If I get this fill, or if I put this order in, right, and I delete the screen, what's it going to tell me? It's pretty cool. So based on the stop loss and take profit that I have set before this order gets filled, I'm risking 31 and I'm looking to gain 93. So I'm risking 25 ticks and I'm going to take profit at 75 ticks in my direction. So it's pretty cool that, it just from a visual perspective, what TradingView, how you can easily connect them and then, put your limits in and you're good to go. So you don't have to worry too much. By the way, the market just closed, so this is not something I'm going to do, but I think it's pretty good to visualize. And this is just off of one micro E-mini S&P 500 futures contract. So again, right, today's action, if you think about it, off of one contract from low to high, you probably had $200 to $300, right? If you caught that entire move, of course, no one will. But if you had just one contract, that's like $200 to $300. One micro E-mini, that's pretty cool that you can play the sizing like that. And then you can, of course, grab 5 contracts, 10 contracts, and then, for scalps or whatever style you like to do. The sizing is endless, and the opportunity is it's the same thing. It's pretty straightforward, and you can put that's how I've been trading. I have almost never played a futures play without a hard stop put on at the same time or very shortly after I enter the trade. I always just put it on, not because it's fun to visualize. And then it's just always a good thing to have in the back of my head. If my stop hits, this trade's invalid anyway, right? So for example, that would have been how you can do it or how it works. It's pretty cool. So I've been liking it versus playing. If I cancel that order, cancels it, everything goes away. You're good to go. So something just happened. Alrighty. All right. So I will go into the account on tomorrow's video, and we'll go into all the accounts and stuff. I think it was a green week. It was a green week in the futures account. Pretty sure it was red in the Webull. And then I think it was probably red in the Robinhood, I think, just because market wasn't really down much, but I think it might be down a couple $100 from where it was. I think that's because of the Labu situation. But to be honest, I'm not really disappointed. It was but it was a lot of wonkiness, a lot of manipulation, I think, a lot of reasoning or a lot of ways to try to screw everybody over this past week, and I don't really feel terrible about it. There's really just 2 trades, I think, and looking back at myself, there's 2 trades that I'm looking at. I'm like, if those 2 trades go different ways, you learn from the mistakes. You see that fake out. Those 2 trades go different ways. The signs were there to stay in or to reverse or whatever. It's a completely different week for me. So I finished strong. I think I did pretty good. The past 2 days were green. Started off red. And then we had the the strangle. We got strangled by the strangle. So that was just an additional, couple $100 suppression immediately by default on that swing. But it's all good. It's all good. Interesting week. We break that. Yeah, I mean, if we break this trend line, just talking on SPY, right? I mean, I don't think anyone's expecting that to happen. So what happens then? I think you had a situation this week, for those who are bearish and who think we're going to go lower. A lot of reasons, as you talked about, a lot of reasons why. For those who think we're going to go higher, right? Could be some, maybe not that many reasons why, but there's also, you can build up a case for some reasons why, right? I think the move on Wednesday off the trend line really got people going like, hey, we're going down. The next leg move is beginning. And if that were not to confirm next week, and we actually were to break over 400 next week, gets a lot of people scratching heads, a lot of stop losses get hit. And there could be a nice squeeze. So we'll see. I mean, obviously the potential's there, but no guarantees. We can't expect a breakout until we get it. So that's just kind of how I'm viewing it for right now. I think I'm very much prepared for it to happen and ready to take advantage of opportunities if it happens, because I think that you're going to be in, that's the situation where I think it will be very hard to comprehend for a lot of people if it happened, that maybe people miss a lot of opportunities to the upside because of that in the short term. I don't think that there's a reason why a lot of us here, even just trying to be trying to be objective and look at things, if there's opportunities that present on the breakouts, if it happens, there's no reason why we can't take advantage of it, A, And there's no reason why we should try to be, pointed on the downside if we start breaking, right? Stop losses get hit if you're a short, right? Stop losses get hit. It is what it is. It invalidates your setup. And we move on to what else is available, right, into the upside. So we'll see if we get that. No guarantees. Today's finish is pretty strong, but does that mean much into next week? Probably not, right? We'll come back in on futures on Sunday, and we'll have to see how that's all reacting, and we'll get a good feel for how maybe Monday begins. So we'll see. Today's first day trading live trading futures, a lot of fun, no destruction of Greeks. No, I think it's so nice because you could put in, the way that I think about it too is you can go in there, put that bracket order in, right? Put the limit buy, put your target stop, and then the sell, okay, based off whatever you're seeing, your support, resistance, whatever trends. And you could do it, first off, do it with one contract, but do it on like the monthly chart, or let's say do it on like a 1 hour chart. And then, you have to give yourself room for bigger stops, but that offers bigger returns, right, to the upside, instead of looking for small scalps. Maybe that's another idea with good to canceled orders. And, as long as you're not in with huge size, right, it's an idea. You could do something like that too. But I like it. Can kind of walk. You can. I think it presents the opportunity to walk away a lot more. To put something on and walk away, knowing my stop is in, the take profit is in, and I don't care about the time. This could take 6 hours. It could take 10 minutes to get to these levels. I don't really care. That's why I think it's pretty cool. Finally broke the 1 month losing streak. Boom. That's what it's all about. This past, I think I'm heading in that direction right now. I feel like that's where I'm at. I'm there just the beginning of the week. I was feeling really shitty about it, but some mistakes we corrected and we kind of came back strong. Bull trap hit 410, crack back down. I wouldn't be that would be. I think the situation to cause mass pain, which is the market's job to do, is I think a break of this trend line. How high it goes, I don't know. I don't care. And then a freaking destruction back down. That would freaking make everyone rip their hair out. But it has to be enough. It has to be enough to get people to jump back in bullish, right? It would have to break out and hold there for like a little bit, maybe get through this earnings and get through the next like Fed meeting in early February, like get past that, get us into February, and then the floor drops out. Like if that happens, oh man. Because you see how fast sentiment can change, right? People will go bullish, in 2 weeks. If you break this trend line, next week everyone's bullish. Then you go, but what about earnings? And they go, and then earnings come through. Whatever happens. And then after that, right, if we're still holding up, people go, oh shit, we're looking good. And then that would be a decent time for a hammer to drop to free people out. But either way, if we did rip to the upside substantially and, it was aggressive in nature, I think that people are going to be trying to short it every single time. And there could be along that route, if it happens, there could be many opportunities where people get squeezed out and hit. And then before the true dump actually comes and actually flushes out. So I would be careful about that. That's just kind of how I would see it. I wouldn't be surprised. I won't be surprised if we break to the upside and have a decent legs behind it for a short period of time, maybe more, I don't know. And then depending upon that type of move, if it's super aggressive versus if it's nice and slow and steady, building, backfilling, building higher lows, kind of taking its time, I think that would tell us two different stories and how long it handles. Like to wait. I know guy does micro scalps and futures. Yeah, that the scalps, if you know what you're doing, you can totally do it. And there is some good. I've seen some people on YouTube that have some streams and stuff that do live trading and stuff. There's some good guys out there. I'm pretty sure. I haven't followed really much and haven't really dove too deep into it yet. I think I'm just going to adapt it to my own style, right? Of not scalping on futures. So it's not going to be like an everyday thing necessarily. But if I see a setup that I like on the S&P or NAS or Russell, there'll be a valid trade there. Like to wait minutes to hours. Yeah, that's me too. used to options. The problem with that is that as you start waiting into the hours, right, on option trades, that still might be valid based off the stock price. The option's just maybe no longer valid depending upon the expiration. So you can get great leverage with futures, and the time decay is not going to be a problem. Not to mention, if you were to go that way, and let's say you did well, tax benefits, I forget the numbers, but there's a certain percentage that's taxed at short-term capital gains and a certain percentage of futures gains that are taxed at long-term. So you got that advantage as well. And then there's no PDT. So you can take trade as much as you want, as many times as you want, all day. And you can trade all night if you wanted to. Not that I would be doing that, but maybe there's a night where, like, you know, some crazy news drops, you know, on a friggin' Wednesday night, and you're sitting there like at home. You know, you finish dinner and you're like, oh shoot, like, what, I got nothing to do. And like, it's raining outside, it's cold, it's the winter time, right? It's dark. And then you look at some crazy news and you see like this perfect bear flag or bull flag setting up on a futures and you're like, oh shit, that looks pretty good. Maybe it's something that you can take, you could take advantage of that. Or if you see a setup that like is very high probability, of course, futures, who knows? But when the volume is there off of a news release or something that could be worth a shot and momentum is there, right? There's opportunity that you wouldn't like, oh shit, like I didn't know at the close there was going to be some horrible news about this, or this. That's really bad. That should not be good for tomorrow. Market's going to be down a lot. Well, now you have a chance to take advantage of it versus I got to wait till 9:30 a.m. for options to open, or I got to wait till 4 a.m. Eastern to trade any shares, or my broker opens pre-market, you know? So it's kind of cool. Some Sunday night futures. I have found this, I had to kind of back test the strategy, number one, but number two, I found huge gap ups and huge gap downs without news driving it off of futures tend to revert back to some sort of mean. So you give it a few minutes, but if we were to, let's say, gap up massive, like this, let's say this Sunday, I'll go to the futures chart. Like if this Sunday we were to go to like the 5-minute chart and we were to gap up huge and we opened futures trading like over like 40.20 or something like that, like up here, like, and we start to kind of build lower highs, like I've seen many, many times this reverts back. Doesn't have to go all the way back to flat, but it can revert back a good bit. And so there could be some good opportunity on that. Same thing with the downside. If we were to gap down or open futures like way down here, maybe lower than that, maybe under 3,900, there could be some backfilling towards, back towards where we were on Friday. So something like that. That's it. The only problem is that there's usually, not a ton of volume during a lot of these futures or during a lot of the overnights, unless there's news and stuff. So you gotta be careful. But and I found that the patterns and the setups, the same setups that you see intraday, aren't as high probability maybe at overnight and stuff, because and then you're scalping or the moves aren't huge, and so you got to be careful. You can get yourself caught up into just taking a million trades and just losing. And there's also fees. There's fees, so you got to take that into account. But I don't think for the size of the contracts and for the amount of the fees and for the amount of money you make per tick, even on the micros, the fees are just, they're minuscule. It's not a big deal. So I don't think it's a huge deal. But with that said, I got to wrap things up. We got to hang up our TV on the wall in a bit. We got people coming over to help. We bought an 85-inch TV. Was it a smart idea? We thought it was a great idea at the time. Now we got to hang it up on the wall. That has been a massive, massive problem. So it's been a lot harder to figure that out because she's heavy, she's big, and we don't want to break this, brand new TV in the process. So with that said, that's what I got to do here in about an hour. And I will see you guys on Sunday night's live stream, because now the market is technically opening on Monday and not Tuesday. So I'll see what the plan is going to be in terms of like football game and stuff. So I don't know what the exact timing, the best time to do this live stream is. I obviously don't want to like do it in the middle of a game if possible, because number one, I want to watch games, and number two, I just figure I want more people to come on the streams and get a chance to hang out than not. So we'll see what we can do when it comes to the stream. But I'll see you guys on Sunday or at some point next week. Peace out. Have a great weekend.